So here I got the 5-day chart for SAVE, SAVE, Spirit Airlines. This has been my favorite airline ticker. I've been watching it every day since the whole market crash in March. So the reason for that, I'll show you guys. Right here is their last 10K. As of April 29th, they had 68.5 million shares. It's not a lot of shares. I mean, trade penny stocks with that lower flow. And so you look back on a longer basis. Let's go to the daily year chart. This was trading at $44 in January, February before this. I mean, what a drop. So that's what caught my eyes. I buy panics. So I mean, I first started tracking me in the 20s. I didn't buy. I think I loaded at first around 17. I took a loss at 15. I couldn't take it. Got back in, I think around 14, and took my loss at 13. I thought, what the hell? This is insane. I eventually, got back in one more and took another small loss. I eventually got back in. I didn't quite catch the bottom, but I think I got low 8s. And I sold, I think, at around 11. Made all my money back from my losses. I got a big size in. But I was pissed when I saw that it bounced all the way, here we go. One day over 18, almost 19. And consistently stayed around 15, which kind of shocked me. But I think it's the market's holding it up. The overall, the SP and the Dows and the algorithms. Because I'll tell you what, when this sold off, it was insanity. Watch, the bids were getting hit so fast. I would get in at 11, it'd be to 10 in an hour. And then it'd be 9 in 30 minutes, It was trading like a penny stock, and it still has been. So I haven't jumped the gun. I don't care about this uptrend right here. I'm not buying in at 12 or nothing. And I'm glad I didn't, because here we are. And that's why I'm doing this video. We're back in my zone. Or some more panic. And here's why. They did another offering. They did a public offering, an unwritten public offering of 12 million common shares, and a public offering of 150 principal amount of convertible senior notes due 2025. And here's the additional dilution. 1.8 million additional common shares and 22.5 million additional convertible notes. They're using it for general corporate purposes. And here they are. It was 11% down that day to 10.25. Closed 10.47. So there was a little bounce. It did break 10. Let's go back to the. You see, broke the 10. Let's do the 5-day. See the whole week. So it broke 10 again, a few times, and it bounced all the way up to 11. So this right here is a real volatile stock. It's trading like a penny stock, and it could just be scalped right now. That's why I like it for now. I want to load it and hold it eventually, but I'm not eager to do it near the price of the offering around 10. I'm thinking we'll see some 9s, and if we see 8s, that's when I'm just going to start biting and scaling in big. If I saw some 9s, I'll probably jump in somewhat. Not too big. I mean, listen to this.
6.5% to 7.5%. In early March, yield pressures heightened as competitors looked to fill empty seats no longer filled with business traffic. Through the second week of March, we were able to stimulate demand with lower fares. But as events throughout the nation were canceled, theme parks closed, and travel bans implemented, load factors dropped precipitously. Capacity growth was reduced as soon as possible, but it was not fast enough or deep enough to keep up with the falling demand.
You get the point. Not only is the market in turmoil, in the riskiest place, but at the same time, my initial reason I was thinking into this, airplanes aren't going away, but the whole argument is they're going to be able to sustain itself and not go bankrupt. But this was my number one, not only because of the outstanding shares, but it was the $1 billion of cash it had. And now on top of the offering, hopefully that should do enough for now. Get the market going and people start flying. I think people might go on vacations eventually. Not everyone's scared as the news is portraying. But the other part of it is the market seems propped up to me. So it's scary to load this for more than a couple of days. Not that it won't go up in a year, but if it keeps heading down and actually does go bankrupt, or he washes you out, takes you down to a 50% loss or something that you don't want to hold through, that you can't stomach, and it's just stupid so I'm waiting for 9s and 8s. I'll start loading aggressively. On the other side, say the market goes up, they just keep, no matter what the news or how many people lose their job, the SP keeps pushing, the Dow keeps pushing, and it breaks 300 or some crazy thing. I mean, it'd be nuts, but it's possible. So let's look. The first resistance is clearly around 1050. It's going to be somewhere around 11. It's going to be more heavy resistance at 1150 and 1250. 13. I mean, so if you get into 10 and you get to 13, I'd say, why wouldn't you take your 30% and see if it drops back down to 11 to get back in? But if on a long-term basis, maybe you load these 10s near this offering and wait, but you keep a risk at that 99, at 999, and then if it drops, you try to load, at 950, so you don't take that loss. You actually make money if it bounces. That's how I'm gonna play this. Let's look on the daily again. I mean, the economy pushes, it gets right back, it breaks all those previous points I talked about. It's gonna be some at 1450-ish, 15, back up at 16, and there's gonna be a little bit of resistance at around 18, and then from there should be almost a gap again to, I'm gonna say like $20-ish to 21. But there's not gonna be many buyers. I mean, sellers. This happened so fast. I can't imagine anyone loaded big, any significant positions, and has held from 22 to 7. Who would do that in their right minds with any? Wouldn't have any capital left if they trade like that, in my opinion. So it's a gap play, but there's dilution. So I'm looking for the 8th this week. In the ideal world, but I'll start getting biting in the 9s. My first target, I get one of those loads, or say 10 doesn't break and 10 just holds all damn day on Monday and Tuesday, and it looks like 10's gonna hold, and I'll buy right there at low 10s and put that 999 stop I was talking about. My first target will be that probably like, what I'd say 1150, 1250. And then from there I'm going $13.50, and then 15. Those are my short-term price targets from a bull perspective. But I'm not gonna get jump in on the morning, on a pre-market, on a green day or anything. I'm gonna load as much of as a panic as I could. I mean, ideally someone could have loaded right here at under 7 and sold 19. I mean, that's a lot of money in like a week or so. I'm not trying to get greedy, go back to the red, because that was right during the panic. But look at that, it's 870. We're right here at this part. That's the next little support lever, 850. See, I like that 850 ad. See the MACD curling too? Look at the volume in the last 2 days. So when the volume came through, this is where we ended because of the offering. So say I low 8 and it breaks into the 7s. I'll take a loss right away at 7.99 and load as low as I can in the 7s. Do the same exact thing, and if it hits 6.99, I'm gone. Depending on even if I'm in the high 7s, I might not even wait for it to hit 6.99. See what I'm saying? You can always cut your loss, lower, and if it bounces to your original point, you'll make money as opposed to just breaking even. People need to get that through their heads. Let's look at the 3 year. So when it was at 45 and up on this uptrend, the market was all-time high. That wasn't even its highs in the last 3 years. I mean, this has been $65. This is crazy. But look here on the 3 year chart, you can see, boom. You can see it was down here before. It's not even at the 30. So this is gonna be one of my top watches this week.